Good morning. Wall Street traders kept driving a rotation out of tech giants whose all-weather earnings made them safe bets at times of economic uncertainty and into a broader category of firms tuned to improving growth prospects. Oil jumped 3%, but Bitcoin sank 3% towards $73,000. At the close of trade on Wall Street on Wednesday, the Dow Jones index rose by 260 points or 0.5%, but the S&P 500 index fell 35 points or 0.5%, and the tech-heavy Nasdaq index shed 351 points or 1.5%. Traders have stepped up their rotation out of tech and into everything from small caps to value plays as they sought companies that will benefit from economic growth. In a sign of broadening, an equal-weighted version of the S&P 500 index, where the likes of Nvidia carry the same heft as Lululemon Athletica, climbed 0.9% on Wednesday. The S&P 500 Value Index gained 0.9% for its fifth consecutive session of advances, but the S&P 500 Growth Index dropped 1.8%. On the broader S&P 500 Index, 7 out of 11 sectors were in the green on Wednesday. Energy stocks led gains up 2.3% as oil prices rose. Axios reported the US told Iran it won't agree to demands to change the location and format of talks planned for Friday, bolstering concerns that nuclear talks are collapsing. Materials rose 1.8% after gold and silver miners were boosted by an uptick in bullion and the white metals prices. But the S&P 500 and Nasdaq index fell again on Wednesday as the sell-off in technology stocks intensified. The S&P 500 technology sub-index shed 1.9% as investors worried about price evaluations and whether Wall Street's AI rally has reached its peak. Software firms were caught in another wave of selling, but moves were more pronounced in chip makers, with advanced micro devices tumbling 17.3% on an underwhelming outlook. Defending the results, CEO Lisa Su told CNBC that the company has seen an increase in recent months, saying AI is accelerating at a pace that I would not have imagined. Still, chip peer Broadcom lost 11.6% and Nvidia was down 3.4%. The Philadelphia Semiconductor Index dropped 4.4%. Palantir slumped 11.6%, reversing sharp gains from the previous day that were driven by the AI data company's strong quarterly sales. Some software companies added to recent losses amid worries that rapidly advancing AI could disrupt industry incumbents. Snowflake fell 4.6%, while Datadog lost 3.3%. Amazon fell 2.4% before its earnings report on Thursday. Supermicro Computer jumped 13.8% after the company raised its annual revenue forecast on sustained demand for its AI-optimized servers as companies ramp up data center capacity. Shares of drug maker Eli Lilly rose 10.3% after the company forecast 2026 profit above Wall Street expectations. For the Dow Jones, Amgen was among the strongest names. The biotechnology stock was higher by 8.2% after the company reported better than expected earnings and revenue for the fourth quarter. Honeywell also offered a boost to the index, rising 1.9% as investors moved from tech into more value-orientated names. After the bell, Google parent Alphabet shares fell up to 2% after it reported fourth quarter revenue above expectations, but said it will spend $175 to $185 billion this year on AI. Shorter dated US Treasury yields edged lower on Wednesday as traders waited on delayed US economic data and continued to evaluate the impact that incoming US Federal Reserve Chair Kevin Warsh is likely to have on monetary policy. The January jobs report delayed by the brief US government shutdown will now be released on February 11, the Bureau of Labor Statistics said. US companies added fewer jobs than expected in January, pointing to a continued slowdown in the labour market at the start of the year. Private sector payrolls increased by 22,000 after a downward revision to the prior month, according to ADP research data released on Wednesday. The figures were short of the 45,000 estimates in a Bloomberg survey of economists. Professional and business services shed the most jobs since June. Payrolls declined at large businesses and were stagnant at firms with fewer than 50 employees. The US 10-year Treasury yield was steady near 4.28%, and the US 2-year Treasury yield fell by 1 point to 3.56%. European stocks closed marginally higher Wednesday amid a slew of corporate earnings reports in the region. The Pan-European Stock 600 index edged up 0.03% to close at a record high. The European Telecom sub-index climbed 3.6% to an 8-year high. Chemical stocks gained 4.8% in the biggest daily surge since March 2022. Tech and media stocks fell 2.5% and 0.7% respectively, adding to their steep declines on Tuesday. The healthcare sub-index was lower though, down 0.3% as Novo Nordisk shares weighed. The Danish drug maker tumbled 17.2%, wiping off around $50 billion from the Wegovy maker's market capitalisation after it warned its sales and profits would fall in 2026. Denmark's stock index slid 6.7%, marking its steepest one-day fall since July 2025. On commodity markets, global oil prices jumped 3% on Wednesday after Axios reported that highly anticipated nuclear talks between the US and Iran have hit a stumbling block, raising the risk of an escalation in tensions between the two countries. The Brent crude price rose by 3.2% to $69.46 a barrel, and the US NYMEX crude price lifted 3.1% to $65.14 a barrel. Gold futures settled 0.3% higher at $4,950.80 an ounce on Wednesday. Spot gold was trading near $4,950 in late US trade after rising as much as 3.1%. The US dollar strengthened and investors booked profits after recent gains while awaiting US jobs data and assessing geopolitical developments for fresh cues. Copper futures slid 3.9%, pressured by a stronger US dollar and rising metal availability and exchange stockpiles. Iron ore futures inched up 1 cent to $102.17 a tonne amid broader weak sentiment as end-use demand slows in China. Australian shares are poised to start the trading day lower on Thursday amid a further sell-off of tech stocks in New York. According to latest SPI futures, the ASX 200 index is expected to open the day down by 18 points or 0.2%. ASX-listed tech stocks tumbled 9.4% yesterday to hit their lowest level since February 2024 as investor worries on artificial intelligence creating more competition for software makers peaked. In Australian company news, on Thursday, ASX-listed oil and gas exploration and production company Beach Energy is expected to release financial year 2026 half-year earnings results. On the local data docket today, Commonwealth Bank economists expect the Australian goods trade surplus widened from $2.9 billion in November to $3.7 billion in December. Commodity prices increased slightly at the end of last year, which should support export volumes. Analysts also expect the European Central Bank to keep borrowing costs unchanged at 2% for a fifth straight meeting on Thursday. They'll be watching to see if easing prices prompted by a stronger euro will prompt discussion of a rate cut this year. Rounding out a busy week for central banks, the Bank of England is also expected to keep rates steady at 3.75%. The focus will be on whether more policymakers will vote in favour of a rate cut. On Wall Street, Amazon is slated to post fourth quarter earnings after the closing bell on Thursday, with analysts projecting record revenues. The cloud giant could receive a boost to its retail operations from a strong holiday shopping season and solid Amazon Web Services growth as it expands its cloud computing capacity. The US dollar rose against the yen on Wednesday, pushing the Japanese currency toward its fourth consecutive daily decline ahead of elections expected to boost Prime Minister Sanae Takaichi's fiscal and defence spending ambitions. The Aussie dollar dipped from 70.43 US cents to 69.71 US cents and was near 69.95 US cents at the US close on Wednesday. For further developments on today's local trading session, please tune into the CommSec Market Update podcast this afternoon. Thanks for tuning in and have a great day.